Cyprus's insurance industry is relatively small. However, EU membership is helping the country to attract international insurance management and reinsurance operations. Joining me now is Christos Christodoulou, Frixos Savvides and Mehran Eftekhar from Trust International Insurance. Christo, you are the fastest growing insurance company within Cyprus. Tell me what the secret is behind this success.
In 2009, we decided to enter the Cypriot market. The new board has said from the beginning of its operations that we will become a leading insurance company through innovation and customer service excellence, because Cypriot market was very crowded and mature market. We needed to separate ourselves from the competition. Therefore, the board saw this opportunity to innovate, so we produced a new approach to general insurance, and we have established good systems to provide to customers excellent support.
Tell us how the industry has developed from its British heritage to international influences.
In 1960, insurance was offered mainly from the UK that maintained branches in Cyprus. It was not only until 1969 that was the first insurance company was established on the island. Currently, we have 30 insurance companies operating in a small island of less than 1 million population. The Cypriot people are accepting insurance, and they are insurance literate. The market in Cyprus is relatively small, but due to EU membership, we expect it to grow.
Frixo, what challenges does the Cypriot insurance market face?
We have gone through a lot in these past few months. Definitely, the whole structure of the insurance business in Cyprus is changing, and either it has to change by force or it has to change voluntarily. Traditionally, Cyprus insurance market was predominantly led by the two major banks through their subsidiaries. Now the two major banks, one of them is gone, Popular Bank is gone. Bank of Cyprus is going through a phase of an unbelievable restructuring and redevelopment of the capital and a lot of other activities. And naturally, as a process imposed by the European Union, the banks have to get rid of their insurance arms, and they have to be on the same level of competition as everybody else. That's the major change, which is going to be very painful to the banks, but also it will give the opportunity to young companies like us to either buy out or merge with other companies in order to absorb this unbelievable volume of business which will become available.
Mehran, how do you see cross-border business developing?
In order to be able to do cross-border, you need passporting. Passporting really means that your regulator in the country that you are operating in will allow you to do business in other European Union countries, or actually any other country in addition to European Union, and for the regulator there to also accept you as a company that can transact business in that country, and therefore it will be very difficult.
You already mentioned regulations. What are the key regulations, and what kind of impact have they had on the country?
The main regulation is European Union directives on insurance. We have also international financial reporting standards that Cyprus applies through their local Institute of Accounting and other bodies. We also have the local laws which they have to abide by, and now Solvency II.
In terms of Solvency II, Christo, perhaps you can give us some detail about the technicalities?
As from the 1st of January 2014, the whole way of evaluating solvency and an insurance company will be changing. Depending on the speed things will change, will affect the market, because due to the financial crisis we are going through, the financial position of the different companies on the island has been affected. Solvency II makes things tougher. It corrects things, but it makes them tougher. So the timing of applying the Solvency II and the speed in which it will be implemented will change the insurance industry. Some of the players will not be able to take this hit. This is where, again, Trust International Insurance is a step ahead because we are not affected and we are mostly ready for Solvency II. We are ready to implement all its provisions and our assets are solid. Therefore, we look at the future with a lot of prosperity and we hope that it will be turned to our favor.
Christo, Mehran, Frixos, thank you very much for your time.
Thank you.
Thank you very much.
Thank you.